Good morning, ladies and gentlemen. This is Brad Matheny at Ment.com, trying to keep you up to date with regards to what's going on. This is an SPY weekly chart, and we need to be aware that my Ment rotational modeling system has flipped bearish this morning on the SPY. That means that we are in a new risk off type of scenario. The Ment rotational modeling system operates on weekly and daily basis. The daily has gone bearish, the weekly is still bullish. That puts us in a net 50% cash, net 50% short position. We need to be very cautiously aware of a downside move, which may attempt to move down towards these lower support areas. You can see this line right here. This yellow line would be our lower support area. We could see a bit of a meltdown taking place in the market depending on what the Fed is doing. This puts us in a totally different mode than where we have been. A couple of weeks ago, we went into 100% bullish position right over here. This was a very solid upward trend. I thought it was going to continue. Now we have to be cautious of some downside risk. So now, looking back historically of where we've been, and where my recommendations have been. Back over here, 2019, I recommended 65% cash, 35% invested. And COVID hit very early. We went directly into a short trade right over here in February, mid-February. Right as the top hit, we went 100% short, rolled back over 100% long back over here on the weekly and the daily. Then back over here, I moved everyone into a cash position, or suggested moving into a 65% cash position, trailing your stops tightly as the markets rallied into late 2021. Back over here, actually more over in this area near this previous stop, I recommended moving to 85% cash, trail a tight stop. Right after the rollover back over here in January, early February, we moved to a 50% cash, 50% short position. The daily Ment rotational modeling system rolled downward. I believe this is the end of wave four. We will see if this plays out. This could roll downward, creating a new deeper low. We'll have to see. The Just recently, back over here in January 2023, we moved into 100% long position. Both the daily and the weekly Ment rotational modeling system were long or bullish. And now we've just flipped into a daily bearish trend, which controls 75% of our capital, and that moves us into a bearish cycle. So understand that where we are at right now is ideally we need to establish a trend. The Ment rotational modeling system moving into a downward bearish trend expectation suggests, let me move my mouse off of all these images, suggests that we are going to see a broad downward cycle trend take place, which could be associated with a Fed move and could be associated with a real estate market collapse. Now, over here, I want to highlight this is my new update showing you what's going on. And what I'm going to do over here is come to the custom indexes, and I want to show you here, make sure these are updated. And again, they are not updated. What is going on? That one is updated. This one is not updated. 23. Yes, it is. All right, here we go. So the weekly is still bullish at 25% of our allocation. The daily has gone bearish at 75% of our allocation. We are now into a bearish 50%. And I need to update this. This needs to move over here. But we're basically in a bearish cycle trend. You can see here how most of the daily systems have turned into bearish trending here. We are down into a 50% cash allocation for our primary allocation, or 75% cash for our secondary allocation. This is a move that we make when the markets go into risk off, ladies and gentlemen. When we go into risk off type of scenario, we want to follow that and stay effectively hedged. Now, the rotational modeling system has been doing quite well. You can see that we're very close to new all-time highs right now. This last little blip rolled a very small one, maybe 1.25% drawdown on our account. Nothing serious, but you can see here, this is the new real estate modeling system. Demand has stalled back out. Reductions are high. Price days on market are high. Prices are collapsing. But more importantly, is to watch these metrics down here. Real estate price reductions are nearly 146, 147%. Real estate active listing change, this is collapsing. What this is telling us is that we're normalizing. We've seen a huge influx of real estate come into the market, and now we're coming back down to near zero territory. But more importantly is the heat rank. The heat rank has gone negative. It popped back up a little bit last week. Remember, this is a week old, but look at the tightness index. Oh my gosh, the tightness index has collapsed. The real estate inventory strength is collapsing into negative territory, and seller desperation just shot up to the highest level we have seen in 2 years. What this is telling me is that the bottom is starting to fall out of the market. When we get into seller desperation like this, and the tightness index falling downward like we have here over the last couple of weeks, this is telling me that the real estate market is grinding to a halt. And that means that we could see some spillover into banking, into foreclosures, into credit markets, and into general real estate overall. So we need to be very, very aware of the risk off environment. So, for example, back over here, my new update, we need to be very aware. This is no joke. Special notice. The Mint rotational modeling system turned bearish is one thing, but watching the real estate market collapse at the same time has me worried about banking collapse. I strongly suggest all Mint.com members move capital away from the market as aggressively as possible right now. This means that you need to move into a hedged, very strong cash position, keeping maybe 10, 20% in your trading account as we let the market settle. I'm going to come back over here and we're going to take a look at what's going on a 30-minute basis. And you can see here as we load. In fact, let's go to a 1 hour. And as we load the data here, we will see where we're at. We have been short back over here from February 16th, 2023. We've hit target 1, we've hit target 2. We are still in this short trend. We could see this continue to melt downward. In fact, let me come over here to a 4-hour chart. See where we're at with the SPY. We are short from February 17th, looking for our targets, which will be down in these areas. And if I go to a daily, let's see if we have any short trigger on the daily yet. We have an LX and we have a short trigger right here. So on the daily chart, we have a short trigger right here, MACD indicating that we have now moved into bearish trending, ladies and gentlemen. This is a word of warning to everyone. Stay aware that risk has now been moved away from the market based on my rotational modeling system and my MACD, triple MACD structure. We're getting confluence across many, many indicators. This means that you need to move capital away from risks. Overall, the weekly bullish MACD system. In fact, let's check weekly. I was just there. We had gone bearish here, and we are bullish still over here. So the weekly system still provides us a fairly strong basis that we may resolve back to the upside in a couple of weeks. And it may come in March, like I am expecting. But the real reality of this new daily downside or bearish trigger is that traders need to be keenly aware of the risks that are at play, and you need to move your capital away from risk factors. If you are not prepared for what may come. You will likely take a bigger hit than you expect. All right, guys, pay attention. This is for your focus. I will keep you abreast of what's going on. Remember, back on a 10-minute basis, it's a completely different world, ladies and gentlemen. When you're trading down on 10-minute, you can see here we got short back over here, or even a 5-minute. You can see this is the SPY that we are setting up for broad intraday trends. So this is a scenario where we get intraday cycle trends, meaning the markets can roll around. You can see we went short over here. We hit two targets on a 5-minute basis. We are long over here. But what I'm showing you on the daily basis with my Ment rotational modeling is that we have moved into risk off. The markets have moved into a sideways pause, likely going to attempt to unwind a bit further to the downside or stay in a consolidated, congested pattern going forward. Be aware, the markets are moving in a direction that is not healthy for your long-term investments. All right, guys.